Crypto or stocks? Where should you put your money to become richer in 2025? Is Bitcoin going to explode again, or will the stock market prove to be the safer? Bet for big gains? Let's break it down. Both crypto and stocks have made millionaires, but they've also wiped out fortunes. So the million-dollar question is, which one will give you the biggest returns in 2025? Let's be real. 2024 was a roller coaster for investors. We saw stock market rallies, Bitcoin's comeback, and meme coins making headlines. Again, but where should you put your money next? Why crypto could make you richer? Let's talk about crypto first. Why do so many investors believe it's the future? There are three major reasons: adoption, scarcity, and the potential for massive gains. First, adoption is growing at an unprecedented rate. Major financial institutions like BlackRock, Fidelity, and even PayPal are now actively investing in cryptocurrency, offering crypto-related services and integrating blockchain technology into their platforms. This level of institutional involvement is a big deal because it signals long-term confidence in digital assets. When institutions invest in crypto, they bring billions of dollars into the market, making it more legitimate, stable, and accessible to everyday investors. Furthermore, more businesses are starting to accept Bitcoin and other cryptocurrencies as payment, driving real-world utility and demand. Second, scarcity drives value, and Bitcoin is a perfect example of this principle. Unlike traditional fiat currencies, which can be printed indefinitely by governments, Bitcoin has a fixed supply of only 21 million coins. This built-in scarcity makes it similar to gold. When demand rises and supply remains limited, prices tend to surge. Historically, Bitcoin has experienced massive bull runs following its halving events, which reduce the supply of new coins entering circulation. The next halving is scheduled for 2024, and many analysts believe it could trigger another explosive price rally heading into 2025. Finally, crypto is the ultimate high-risk, high-reward investment. While stocks generally deliver 8 to 10% annual returns, crypto has a track record of 100x or even 1,000x gains in certain cases. Bitcoin, for instance, was worth just $1 in 2011. By 2021, it had reached an all-time high of $69,000. Similarly, early investors in Ethereum, Solana, and meme coins like Dogecoin saw life-changing profits. While not every coin will see astronomical growth, the potential for massive gains in a short time is what keeps many investors flocking to crypto. But before you go all in on crypto, let's talk about the risks, because this market is not for the faint of heart. The risks of crypto. Cryptocurrency is an incredibly volatile asset class with prices capable of experiencing dramatic swings within short periods. For instance, Bitcoin, the most well-known cryptocurrency, has suffered crashes of over 50% in just a few months. This level of price fluctuation makes crypto a highly unpredictable investment. Moreover, the crypto market operates with far less regulation than traditional financial markets, leaving it exposed to hacks, scams, and sudden government crackdowns that can drastically affect its value. There have been numerous instances where exchanges have been hacked, leading to the loss of millions of dollars worth of assets, with little to no recourse for investors. Another major risk factor is market manipulation. Since crypto markets are decentralized and less regulated, large investors, often called whales, can manipulate prices by artificially inflating, pumping, or suddenly selling off, dumping their holdings. These tactics can cause massive price swings, leading to significant losses for smaller investors who may not have the financial resources to weather the downturn. While cryptocurrency has a potential for substantial returns, it also comes with the risk of losing an entire investment in a matter of hours. This high-risk, high-reward nature makes crypto appealing to some, but extremely dangerous for those who are not prepared for its unpredictability. Why stocks might be the smarter bet. In contrast to the volatility of crypto, investing in stocks provides a more stable and reliable path to long-term wealth. The S&P 500, which tracks the performance of the 500 largest publicly traded companies in the U.S., has consistently delivered annual returns of 8 to 10% over the past 50 years. Even during times of economic downturn, such as the 2008 financial crisis or the COVID-19 market crash, the stock market has always recovered and continued to grow. This long-term resilience makes stocks a far safer investment compared to cryptocurrencies. One of the key advantages of stocks is that they are backed by real companies with established business models, revenue streams, and profits. Unlike crypto crypto, which is often driven by speculation, stocks represent ownership in tangible businesses that produce goods and services. Additionally, many companies pay dividends, providing investors with passive income just for holding shares. This steady stream of income is a feature that crypto investments lack. Another major benefit is regulation. Stock markets are closely monitored by financial regulatory bodies such as the U.S. Securities and Exchange Commission (SEC), making them far less susceptible to fraud and manipulation. Technology and AI stocks such as Nvidia, Microsoft, and Tesla are experiencing rapid growth and have already delivered strong returns. As AI continues to evolve, these companies are well positioned for even greater gains. While stocks provide a more stable and structured investment, crypto's high volatility attracts risk-tolerant investors seeking quick profits. Ultimately, choosing between stocks and crypto depends on an investor's risk appetite and long-term financial goals. The big decision, crypto versus stocks? So what's the better move, crypto or stocks? The answer ultimately depends on your risk tolerance, financial goals, and investment strategy. Both asset classes have their unique advantages and potential downsides, making it crucial to understand which aligns better with your goals. If you're looking for high-risk, high-reward opportunities, crypto might be your shot. The cryptocurrency market has historically delivered some of the most explosive gains, with coins like Bitcoin, Ethereum, and Solana turning early investors into millionaires. However, these gains come with extreme volatility. Prices can surge by 100% a month, but also crash by 50% in a day. If you have a high risk tolerance and can stomach sharp market swings, crypto offers a potential for life-changing returns, but it also carries the risk of major losses. On the other hand, if you prefer steady, long-term growth with less risk, stocks could be your best bet. The stock market, particularly the S&P 500 and blue-chip stocks, has consistently provided 8 to 10% annual returns over decades, making it a safer and more predictable option. Investing in companies with strong fundamentals, steady earnings, and dividend payouts allows you to grow your wealth over time with less exposure to extreme volatility. Stocks also come with greater regulatory protection, reducing the risk of scams or sudden collapses seen in the crypto world. But why choose just one when you can have the best of both worlds? The smartest investors diversify. They don't put all their money into a single asset class. Instead, they hold both crypto and stocks in their portfolio to balance risk and reward. A strategic mix of stable stocks and high growth crypto assets can provide the security of long-term wealth building while keeping a portion of your portfolio exposed to potentially massive gains. Diversification allows you to hedge against risks, ensuring that even if one market struggles, the other can help offset losses. At the end of the day, the choice between crypto and stocks isn't about picking a winner. It's about understanding your risk appetite, financial goals, and investment horizon. So which side are you on? Crypto, stocks, or both? So what do you think? Is crypto the future, or will stocks dominate 2025? Let's debate in the comments. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more money-making insights. Let's get rich together in 2025.